What's up, guys? Make sure it's starting. All right, let me get the tweet out real quick, and then, as always, I'll be right back with you. Let's see. All right, there's the link. Post on TrueTrader. All right, what's up, everybody? Listen, I don't know how good the audio quality is going to be. My normal studio microphone is not being recognized at the moment by my computer, so the backup microphone is the webcam mic, which is what you're hearing me through right now. So I hope it's okay. If it sucks, let me know, even though there will not be anything I can do about it until later. But it is what it is. We're just going to roll with the punches. All right, cool. What's up, Josh? Chiefs don't start till later tonight, right? So got plenty of time to get this prep knocked out, and then we can go watch our football team. I hope you guys are all having an amazing weekend. It's been a really busy but fun-filled weekend for me and my family, and I'm happy to be finally back to full health. Still have a bit of a cough, so hopefully that doesn't rear its head in the middle of the stream, but if it does, you've been warned. But I am feeling better, which is the important part. I was like walking death all last week except Friday. Friday was like the first day of trading where I actually started to feel better. But it was funny. Like, I've been so active and so on my grind lately with the gym and my just overall health, that the most angering part about being sick for last week was like not being able to hit the gym. So I'm happy to be back in the gym again, and it didn't steal all my gains. What's up, Jordan? Raul, how's everybody doing? I'm gonna get this one kicked off here in a little less than a minute. If you guys haven't already, please just retweet the tweet I put out, or share your own tweet of the stream link, whether that's on Instagram, Facebook, Twitter, wherever you have people that might find value from this. It always helps, right? And make sure you give it a thumbs up if you like what we're doing. Leave some comments, not in the live chat, but especially you people that are watching this later, right? If you're not watching this live, please realize how much it actually helps me, because I read your comments. So let me know if there's things you want to see more of or less of. Like, I can always tailor this to your guys' needs, but I won't know what those are unless you guys let me know. All right. All right. It's time to kick this off, guys. It's Ricky Analog. This is the Sunday prep. Today is November 20th. We have a short week. Thursday is Thanksgiving. So Thursday the market is closed. And Friday probably will be really slow as well, right? So we got Monday, Tuesday, Wednesday to really kind of focus in and make our gains. And then remember why we do this, right? Surround yourself with people that matter in your life and enjoy the holiday, and remember what this holiday is all about, right? Being thankful. All right, so if you guys don't have a broker you can trust, check out Cobra. There's a link in the description. They have a Black Friday sale going on. I think it's like 3 months of the platform for free or something. You can use the link. It'll take you to their landing page, and it'll tell you what their Black Friday deal is. And even after the Black Friday deal ends, you'll still get 25% off your commissions moving forward. And their commissions are already dirt cheap, and they hands down best customer service out there, guys. Spikeet, there's a link in the description for them as well. Amazing product that I use heavily to backtest data and see that there's a statistical edge that I can actually exploit and make money in the markets. Scriptstotrade, these guys make tools for Thinkorswim and TradingVue. They also help create algos for NinjaTrader, I believe. They have a subscription package where for a monthly fee you get a whole suite of tools, and they are very, very powerful tools. I wouldn't, trust me, I fox with them heavy, guys. And if they don't have what you're looking for, talk to them, reach out, and they will help work with you to create whatever vision it is you guys have. TraderVue, didn't pop up. These guys are who I use to track my performance metrics. There's a link in the description for them. Check them out. If you're not tracking your performance metrics, I don't know what to say. And here is your earnings. Remember, it's a short week, so really just Monday, Tuesday, and even Wednesday is kind of a slower one, right? But there's a few guys that are reporting this week, so there definitely will be some trading. All right, guys. So familiarize yourself with that. Not knowing someone was reporting is not an excuse. This is a business. Treat it like one. All right. So I kind of crowdsourced from Twitter and through TrueTrader, asked people what they'd like me to kind of talk about for the introduction discussion topics. And so there's a few tweets that I'll show the tweet and we can kind of read them and we'll just talk about them, and then we'll get into the actual prep after that. So the first one was from Marius. He says, expanding the playbook or changing traded instruments. For beginner traders, given lower liquidity in small caps, is it wise to expand to large caps, options, futures, forex, or tough it out in small caps or any other market that experiencing a lull? Guys, I can't talk about this enough. I say this all the time, right? People pigeonhole themselves into like saying like, oh, I'm a small cap trader. And it's okay if like, you know, if you, that's where you make your money and that's where you have your edge, then by all means exploit it in that market and stay in your lane, right? Know what you do best and focus on your strengths. But stop having a limiting mindset, this fixed mindset. You need to have a growth mindset, and you need to understand one thing that I talk about all the time, and that is if you can actually learn the underlying fundamental ways that stocks move via a trend, you will start to realize that there's certain things that transcend market caps, right? Like I can trade large caps, small caps. I can trade options as long as I understand what's going on with the underlying equity, right? You could trade crypto, forex. You can trade whatever asset class you want if you understand how markets move, if you understand the mechanics of how stocks trend. And that is something that is as simple as it sounds. Most people actually don't know, right? They like to think they do, but when the tire hits the road and they're asked to put words to their thoughts, they become a blabbering mess, right? Because they can't actually define how stocks move. And that's one of those things, you know, I talk about it in TrueTrader all the time. We talk about the way time frames have to do a certain type of dance in order for if-then statements to be formed. And if you learn that, then there isn't a single asset class out there that you can't trade. Now, you don't need to use your hard-earned capital to learn. You can always put ideas to test without actually risking capital, and learn and expand your playbook and wait until you have that edge defined. Do not just jump out there and start, you know, risk it for the biscuit type style or YOLO, because your niche is dead, right? Small caps have been a little slow, but they'll come back, right? So, you know, I love the fact that I can trade large caps. Why? Because I love small caps, but being able to trade large caps makes it so that I can be extremely, extremely patient for those 4, 5, 6 small cap setups per year that are the A+++ juiciest setups out there that I know that are worth my attention. I don't want to be that guy that wakes up every morning and when, you know, maybe I need a stock to gap up 40, 50, 60% to really kind of end up on my radar. But if weeks go by where that's not happening, you start to go, that stock that's gapping up 20%, you know, that's that less attractive girl at the club, but we're gonna go spit some game at her, right? No, that's how you end up locked up in a relationship you don't want to be in, guys. So expand your playbook, but don't do it risking real capital. Get an edge, but stop having a fixed mindset. You need to have a growth mindset, and don't limit yourself, guys. All right, the next question comes from Tamara. If there's time, I think going over a trade from previous week that either didn't work or did work, discuss what you would have needed to see versus what it did, and vice versa. The candle by candle granular level of detail was helpful in your BA explanation. She's talking about Boeing. I did a Boeing review for the people in TrueTrader, right? So if you guys are wondering what that's about, you can go over to TrueTrader and check that out. But I think that's a great question, and I do have a trade that I think fits the bill. So I'll go ahead and pull up the charts real quick. So the trade I'll talk about was one that didn't work, okay? Dude, I love the fact that I typed Facebook or FB and Meta popped up. All right, so it was on Meta on Friday. It was a loss. Oh, God. Can you believe that? Somebody lost on a trade? Yeah, happens, okay? Let's just look at, we'll go ahead and look at a 5-minute chart. All right, so the idea was we had this big flush. Let's go ahead and look at the daily first, I guess. To see where we were at on the daily, right? Kind of gapping up. We've had this big push up into the underside of the 20-day. It's pulling back and it was gapping up into levels of resistance. And, you know, I was looking at this from the short side. And, you know, a lot of people in our room actually traded on the long side off this early morning flush. We had this big old morning flush. Let me go ahead and get rid of the, actually, no, I got to leave that there. So a lot of people bought this in TrueTrader, right? And they sold into this pop. A lot of times for me personally, one of my favorite setups is to look for those stocks that have the early weakness, like this Meta flush. And I like to short the pop back into resistance. And, you know, the reason I think this is a good example is because I want to show you guys that a lot of times we're going to be right in the bigger picture idea, but wrong in the way we express the trade. So my plan here was a short the pop back into the 5-minute 20, back into this 113 area, which I did. I shorted the pop. When I put the trade on, the concept or the idea behind the trade was we're putting in a lower high and that I'm joining trend to the downside. So where does that idea become negated? Well, if we make new high a day, then my idea was wrong. And as you can see, you know, this pop here put in a nice lower high. We had this kill candle, not a kill candle at all, but really just a candle that you're kind of happy to see, right? This 5-minute candle here is a beautiful candle to see if you're shorting the pop looking for a lower high. So I put the trade on and target was low a day, okay? So you can see right off the bat that the risk reward's phenomenal, right? We can use something like this to kind of illustrate the risk reward on this. So over highs into the 5-minute 20, and we're looking for low a day. So you see it's very asymmetric, right? We're getting 3-to-1, 4-to-1 on this trade. This is exactly what I like to trade. The problem is that people get so caught up on an idea that they don't want to obey their plan, right? The plan for me was lower high. So if we make a new high, whoops, oh man, I didn't mean to do that. Let's try this again. All right, I think it's this button. So you can see as these candles develop, right? When we make this new high, it takes me out of the trade. And then what happens? Well, the trade works, right? You can see we end up going lower highs, holding trend, and that's okay. I'd much rather lose money by sticking to my plan than stay in this trade, break my rules, throw my plan to the wayside, and have this thing start putting in higher lows and grinding higher, and me take a much bigger loss than was ever planned, right? I always tell people this. You can break your rules today and possibly make money, right? You could add to a loser. You could not stop out when you're supposed to stop out. Whatever it be. You can break your rules and you might make money today. But I guarantee you, the person that wants to break rules so that they're green today is not going to have a career in trading. Careers are built on discipline. The only way to stay in this game with longevity and be around long enough to see actual success is to stay disciplined and obey your rules, stick to your plans. And so this trade took me out. Guess what? It's just another drop in the bucket, right? you know, we did the review of the system I trade a few weeks ago because it was the 1 year of that data. It was 1,289 trades in the course of a year. Okay, so there's no way I'm going to let a single trade make or break me. I'll take my stop. I'll move on. I'll start looking for the next A plus setup. But what I won't do is break my rules and stick around in a trade where it already should have taken me out. So that was the trade I kind of wanted to show you guys. And the only reason is, like, I was right. The idea was right. But the way I chose to express it via, okay, this is going to be the lower high or it's not, happened to be wrong. And it's okay to be wrong. I mean, that's what the shirt says, right? It's okay to be wrong. It's not, what does it say? The only thing wrong with being wrong is staying wrong, right? And all that means is, like, you can be wrong a lot in trading, but you have to be wrong quick and just move on and have, you know, short memory. You can't just dwell on it. And, you know, there could have been somebody sitting right next to me who said, I'm going to wait for this to blow out through high a day, put that blow off candle in, and then I'm going to set my risk and join that trend to the downside, right? And if we're both sitting right next to each other and we're both looking at the same trade, but we both have slightly different ideas, if I had been right, he would have missed the trade and I would have caught the trade and it would have worked and I would have made my money and he wouldn't have. But it just so happened that I'm the one that had to take the small L and that guy would have been right and he would have made his money. But what you can't do is look at him and go, oh, I want what he has. You had a plan, you stick to your plan. Because what I've seen too many traders do is they'll be like, okay, I'm going to risk against the, you know, the low of this previous low. And then it goes lower and they go, well, you know what? The 200 days right below there. And so then they're just holding on to the 200 day. And it gets to the 200 day and goes through the 200 day and they go, 52-week lows are right there, right? You can always find a next level, a next excuse to stick in the trade. And it's just going to blow you up in the long run, guys. You got to have discipline if you want longevity. So, I mean, it was a loss, but I didn't care about it, right? I moved on. It is what it is, guys. Thin skin ain't going to work in this game. All right. The next question is from Josh. He says, overbought short setups, entry on resistance, or when support cracks on the daily. I know some prefer shorting strength, but don't always have to find the top. Thanks. Example would be GS. So one second, let me get a sip of water. So I'm not going to go and look at the charts or whatever. I just want to talk real quickly about the whole topic about shorting strength or waiting for seeing something first, right? If you want to short into the strength, it's something, you know, I do it all the time. Parabolic exhaustion moves, like these big, unsustainable moves into levels. I will enter into the move. But that doesn't mean I don't have a set stop. I always have a set stop. But what it forces you to do is be very, very picky about your entry. Okay? And right now, at the moment, we're talking about intraday. Like, right off the open, parabolic move. So when I see that type of move line up with a chart, a daily chart, like the bigger picture chart, is also extended and also very parabolic itself. Those are the kinds of moves where I love them. They're probably one of my favorite setups. But in order to take those entries into the strength, you really, really have to be a sniper in terms of, and you still also have to understand that you're probably going to be wrong more often than the person that waits for some sort of lower high or exhaustion move where you see a blow off. Okay, it's not, there isn't right or wrong, but I will say this: when you're less experienced, the people that are earlier in their careers that are still learning like how to see these moves, you're going to give yourself a much bigger, cushion or, safety error, margin of error, if you are patient for something first instead of entering into the strength, right? Whether that be that blow off candle and then just risking over those highs, or waiting for the blow off and then the push up and then shorting the pop, anticipating a lower high, or even more confirmation than that is the blow off, the pullback, the lower high, and then the break of the level where the pullback happened to, that's your confirmation. And it just progresses into less confirmation to more confirmation. And then, but then on that same spectrum, right, is better risk reward down to less risk, less asymmetric, right? Less risk reward. So you have to figure out where you fit on that spectrum. Personally, I really like to get those clean entries into the strength and have my set risk. And if it starts to work, now I know I have really, really good risk reward. And once it starts to work, I can add pops and knowing that like I'm going to be able to get even more size with the same amount of risk. So there isn't a right or wrong. Personally, I think you have to kind of ask yourself your experience level and your comfort level with actually spotting how unsustainable a move has gotten. Because I see a lot of people go, this is it, that's the emotional move. And like if you kind of zoom out a little bit, like that wasn't it at all. And when you do see it, you're the one stopping out into it, and then it blows you out, and then it comes back in, right? So it does take a bit of finesse to learn how to spot that exhaustion, unsustainable parabolic push. Same on the downside too with the panic flushes. Same thing, just vice versa. Okay. And then the last question was from my friend Adam. He wanted me to talk about the incredible amount of talent on our favorite hockey team, the St. Louis Blues. Honestly, like he's just joking there, and it's bless his heart he uses an Android phone. I won't waste your guys' time talking about my favorite hockey team, but thank you, Adam. Thank you for that question. All right. So, all right, let's get into the actual prep, guys. Enough joking. Guys, neither I, TrueTrader, or any of our representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell these stocks. It's simply for entertainment purposes only. All right. So here we go, guys. Here is the ES chart. Let me get rid of this. There we go. Let's start with the monthly. All right. So actually, I know exactly what I want to say. We're just going to step down time frames, right? And objectively look at something. Okay, monthly time frame. Uptrend or downtrend? Downtrend. This is objectively a downtrend. Can that change? Of course it can. But at the moment, downtrend. Okay? Weekly chart. Zoom out. Uptrend or downtrend? Downtrend. Okay? We're, lower highs, lower lows. Up into the downtrending line. For me personally, I use the 20 SMA on all time frames. So big pushes into the underside of the 20 SMA, reject, we make new lows. Now, that can change as well. How does it change? Well, when the author attempts to go lower, do we go and make new lows, or do we stop and make higher lows? At the moment, we have not, on the weekly chart, we have not attempted to head lower yet. When that happens, then we'll start to stalk to see, do we make new lows or do we stuff? And do we have that? Remember a few weeks back, I don't remember how many weeks ago or whatever it was, we had the whole topic was when it's okay to anticipate. So we will have that talk again the next time on these higher time frames, like especially the weekly, the author, price, attempts to go lower. And we will start to learn or refocus on, are there opportunities to anticipate a higher low and anticipate an area to get long. So let's go into the daily chart. Uptrend or downtrend? Uptrend. Okay, notice how now we're back above the daily 20 and we're making higher lows and higher highs, and we're just trending. Okay, that's okay. On the lower time frames, and you'll understand when you start to learn how stocks move, you need to understand that this happens even on the intraday time frames too, right? You could be on an hourly chart, we could be making lower highs, lower lows, lower highs, lower lows. But even within just one hourly candle, if you look at a 1 minute chart, that 1 minute chart might be in an uptrend for 1 hour. Okay, so you could be in an uptrend on a lower time frame, pushing into the downtrend of a higher time frame. Okay, and that's what's happening here on your daily chart when we're talking about what it's doing with the weekly. It's just trending up on the daily into a higher time frame downtrend. Okay, so at the moment, we have this kind of little, we pulled back to support on the daily. In fact, this is a beautiful, beautiful hold of that support. Now, what I'm going to be watching really early on this week is this. Let me just try to show you. Does this end up being a lower high here? And it doesn't have to stop here, right? We could drift higher for a few days or whatever, but do we put in a lower high somewhere in these areas? And then the break of this level right here, which I don't know why I just did that because there's already a pink line there, but the break of Thursday's lows would be how price on the daily chart tries to head back lower. Problem is, where's it going to head lower into? Right into all kinds of levels of support, even the uptrending daily 20 SMA, right? But I will be watching that because I do want to see if we try to end this daily uptrend, or does this daily uptrend just want to continue, okay? Because once the daily uptrend ends, then we can look to see, does the author now want to attempt to try to head lower? And that's exactly where the step-by-step process that we have to follow to remain objective, right? Because this is a bear market until the higher time frames decide to start cooperating. And we got to do our very best to, one, make plans for every single scenario, but also stay objective. Everything needs to be done through the lens of black and white objectivity. All right, so let's drop into some of these daily or intraday time frames, and we'll start to point out some levels to play against. Thursday's lows are the first level, right? Because what did we just talk about? Do we make a lower high here and then try to take out these lows to roll over? So obviously the first level of support is going to be Thursday's low a day, okay? Any kind of pullback there, I want to see, do the bulls show up in support? Even if we crack, we definitely have right below it this 38.70 area, which is going to line up with your 20-day. So even that short trigger on the daily chart would just pull us back to the 20-day, and lots of levels below it as well that are support, like the quarterly. And you also have the 50-day right there too. Remember, let's zoom back out. The 20 and the 50-day aren't too far apart from each other. They're kind of just doing this little weaving of the moving averages, right? So pull back to the quarterly would still be another level of support. Obviously, you guys can draw a trend line. You don't need me to do this for you, but I don't use these trend lines. Like I talk about this every week, right? This isn't written in stone. This is just for visual guides. What matters much more to me than some stupid line on a chart is the actual trend. Lower highs and lower lows, or higher highs and higher lows, guys. So again, I don't want to throw too many trend lines. I do like support and resistance horizontal lines, but let's see. So 38.40 is your quarterly, so that would be the next level below the 20-day for me. Below that, probably 37.50s, that 37.20 level from last week's Sunday prep we talked about. 36.40, and then we're coming down into this 35.70 area would be the levels of support. Again, I don't think we're going to get all the way down there. It's a short week. I don't think we're going to get, like I said, and this is a good point to make before we go any further. A few weeks ago, I kind of made the statement that it wouldn't surprise me to see price range narrow and for us to start to set a base and kind of coil a bit. This being a short week, I don't see anything crazy probably happening, at least in the large caps. It is Turkey week, right? The Turkey Bowl. So maybe we'll have some crazy small cap runners. Frequently on crack week like this, we do have, like last year was crazy. This year's so much more mellow in the small cap space that it wouldn't surprise me if nothing gets really out of whack, but always be prepared for the unthinkable during this week, right? The Turkey Bowl. But as far as large caps are concerned, wouldn't surprise me to see things really kind of muted, which moving into the holiday season, maybe that's exactly what happens, and that's what kind of gives us that narrowing of the range and that consolidation as we can build a base. And again, I don't care if the base is built in order to make a move higher and try to regain a bull trend, or if it's just the next, digestion of the move for the next leg down. Regardless, I do think that we are setting up to make that kind of base be built. Let's go back into the intraday time frames. Let's look at some resistance levels. If we were to gap down, I'd probably be looking at that 4,000 level as the first level of resistance. Obviously, last week's highs are going to be right up into the underside of the 200-day as well. Above that, let's see. Above that, I'd be looking at 4110. If you're wondering where I got that level from, you see all. Actually, I can just extend this right here, right there. 4110, and then 4200. We have a bunch of these peaks up there. And then above that, we're going to be looking at 4250s. Again, I don't think we need to make plans for too far to the north or too far to the south with it being such a short week. So that's going to be the thoughts on the ES, guys. Just remember that currently the higher time frames are still in a downtrend. We're just in an uptrend on the daily. We're pushing in the levels of resistance. We've already seen last week, the fact that we're just kind of butting our heads up here. So it wouldn't surprise me to see this kind of turn down. Any kind of pullbacks in the levels, I'm ready to play bounces. I'm not scared to get long for day trades. I'm not scared to get short for day trades. I'm not, and they're actually, when we get into the actual ideas in the prep, there's two ideas that you're going to see that are kind of swing type ideas. And what I want to point out about that is that the only thing I would even consider swinging from the long side is stocks that are still in near 52-week highs or in very nice bull trends, because right now the broader market is still in a bear market, and so it's really tough to want to be long anything for swings. The only things I would think about doing that for, and you'll see the charts when we look at them, are stocks that are performing well even in the bear market. All right, so again, NQ, we're not going to make comments about it unless there's something that is much different than the S&P. The only thing I wanted to point out was we talked about the fact that a few weeks ago it had been lagging, right? It had not gotten to its target while the ES had, right? The ES had a target of the weekly 20, and it had gotten there, let's see, 1, 2, 3, 4 weeks ago. Okay, this is a weekly chart. 4 weeks ago, we pushed into the weekly 20 on the S&P. And I said, just because we haven't yet on the NQ had that same long trigger to get to that same target for that index. Well, it got there, okay? It just took a few weeks longer. So we did get there just last week. So we're there. We've got to the target. It's found balance. Now, does the author want to try to continue higher, or does it want to find resistance here and try to probe lower again? We'll see. Bitcoin still just kind of hanging around here after the big crack. Still a lot of uncertainty out there. I read somebody was saying some 100+ companies out there are getting ready to file for bankruptcy from contagion from the FTX debacle. When there's that much kind of uncertainty and negativity out there, you got to be kind of cautious on this stuff. But at the same time, max negativity, max pessimism oftentimes is really that opportunity, right? So I don't know. I don't dabble in this market. I just review it on a weekly basis because I do trade equities that follow. But yeah, until it reclaims the levels where that major break happened, all pops back into the underside of that should be treated as resistance. The 20-day is curling down. It's soon going to be below that level. And then if it wants, the author could just continue trend lower. I think below the lows from that big break really could get you guys panicking down into like the 12,000, maybe even 10K. Let's see. 14 would be like almost too close, right? Like that's the first level where I would see maybe some support, but I think you come down here into some of these levels like this 12.6. I really think that's doable if we break those recent lows. So a lot of people out there follow this stuff a lot. Make sure you guys understand that this can be looked at through the exact same lens that I show you guys how to look at the S&P or the NASDAQ or an individual stock. Anything that is a chart of price over time is going to play by the same rules as any single equity we look at, any single index, commodity. It doesn't matter. The only way for it to go higher is higher highs and higher lows. The only way for it to go lower is lower highs and lower lows. And if you can read a trend, you can make if-then statements and you can trade these things. So you don't need to be scared of them or whatever. I just happen to be fine trading stocks, and I don't really feel the need to kind of extend myself over into a 24-hour market. So let's look at, we'll get into the sector analysis. Here is bar chart. Oops, let me make it bigger. Hope you guys can see that now. Obviously, you know, a lot of kind of, you know, not super red, a lot of kind of just flat weeks. A few that were a little bit redder, right? Discretionary's been weak. Energy had a pretty weak week. And real estate came in. But the ones that stand out are the ones that were strong, right? Staples, healthcare, and utilities. So let's take a peek under the hood. We'll go look at the ETFs real quick. Retail, you know, rejected right off the underside of the 200-day slash also those resistance levels we've been talking about. What did it do? It pulled back to support and it's bouncing, okay? I still think levels down here into the 20-day can probably be played for bounces. I also still think pushes back up into the underside of the 200-day can be looked at as resistance for the fades, okay? Financials, still, I think relative strength in this sector, okay? I think it's trending really well. It's not, one of the things that you'll notice is it's not getting back to the 20-day on pullbacks. That to me just shows so much strength that it's not even able to get back to what it technically should be able to get to on short triggers, right? So, especially something like this right here, right? So you push up into resistance, pull back, lower high, and then you get this lower low when we break right here, okay? That was the short trigger on the finances, on that sector, okay? Couldn't get back to the 20-day. Well, I mean, at least it hasn't yet. It still could, but the fact that the pullbacks are getting bought up well before the 20-day still show me that there's a lot of strength there. Real estate had a big rejection up there into the quarterly. You know, we were kind of looking for this level, 40, right? It didn't get there. Again, I don't know. There's not a lot of individual equities in this sector I trade, so it's not something that I really care too much about, other than the fact that I am interested in real estate as an outside source of income, right? But so that, you know, is the main reason I kind of look towards this sector ETF to see what's going on out there in that. Strength. This is the healthcare sector. We keep talking about it. It's grinding higher. We're back above these resistance levels. I think they're going to turn into support. Even if they don't yet, I feel like this one has got the strength. And the real reason we do these sector analysis is to look for relative strength and relative weakness. Where is money flowing and where is money not? If money's flowing into a sector, I don't want to be shorting it. And I probably want to look for long opportunities. If money's not big money, we're not talking about retail money. If big money is not flowing into a sector, that's where I don't want to be putting money to use on the long side. But I do possibly look for the shorts in those sectors, right? So make sure you guys always have that bird's eye view when we do the sector analysis, okay? Sorry, my throat's getting to me. So yeah, strength in this sector. I still think pullbacks to the 20-day are going to offer good bounce areas, but I do want to start seeing it hold above that 134 level. This is the one we talked about last week as the opportunity for the short side. You see it work almost perfectly off that resistance level, pull back, held support, and now we're kind of pushing again. What I would want to be watching for is, do we come up here and make a lower high and set up for another kind of fade, or does this want to continue trend higher and get back above these highs, above 82, let's call it 82.25. What's the high here? 82.26, okay? Above 82.26, maybe it wants to catch a bit and head higher. Then I would be looking up here into this 88 area as resistance. But let's take it one step at a time, right? I don't think we're going 88 this week. I would like to see what happens when we retest those recent highs. I don't want to be buying it versus Thursday's lows though, because to me, I think this could easily come back into the annual pivot in the 20-day, right? Down here into the 77 area. That would be where, if I was trying to get long names in this sector, that's where I would be looking to do it. Not here against Thursday's low day. Industrials. Again, right up into levels of resistance, pulling back. Does it hold outside of this downtrend we're kind of breaking out of? Basically, what I'd look for is, can we get back above those highs from right there and basically try to continue trend higher. Yes, there's resistance a little bit right above it, but keep in mind where we ran into resistance recently was that psychological round 100 level, right? So it makes a lot of sense. Can we reclaim 100 and then start holding trend and go higher? That's what I'd be looking for. Utilities. This is the one still holding trend. It hasn't reclaimed this trend line that it had lost. But again, we talk about this every week. That's not the level for me for the shorts. I still want, for me personally, I want the weekly 20. So we're kind of trying to get up there. You can see what I do like on the, if you were bullish this stuff, what I like to see is this, is the fact that we put this higher low in right there 2 weeks ago. That big pullback got soaked up and now it's pushing again. So what you'd want to see is a break over 2 weeks ago's highs, and that should hopefully get us up into the levels where I would be looking to get short names in this sector. All right. Staples still strong, but I do still think they're going to run into some problems, and I think it's getting a bit extended here. So I would really watch for some of these, especially that 75 psychological level. I think we're getting a bit extended. I think we're going to put in a lower high up here. If it were to reclaim that and start holding that above this 75-50 area, I might start changing my tune, right? Then we might want to be cautious that it might want to levitate up into the 77 area. But as long as we're below 75.50, I feel like this is probably a good spot to be looking for that lower high to be put in on this higher time frame, right? So push up, lower high, do we run in, make another lower high here, and then try to come back lower. Again, if range is going to narrow and we're going to set a base, all that's going to do is, even if we put in this lower high here, it's just going to kind of generate into one of these little, let's see here, just sideways consolidations for a while, right? And that's fine. But this here is your opportunity, if this is going to be the lower high, to kind of get involved and see some of these opportunities on the short side. Discretionary, this one's been relatively weak still, right? Everything else, you know, we just looked at a few names that had gotten a bit extended or still pushing. This one hasn't, right? It's just been doing absolutely nothing. I feel like that meme where the dude's poking that thing with the stick and like, come on, do something. That's here. And why would that be? Because in my opinion, that's telling me that the big money is not flowing into this sector, right? So that's the way you have to look at these things. Relative weakness means that there must not be a lot of money flowing in. If there was, we'd be seeing movement. Big money leaves footprints, guys. It has to, every time. Same with, here's your communication sector. Another one that's still kind of dead, not doing much. So if you're looking for short ideas, go look into the consumer discretionary. Go look into the communication sector. Look at the individual names. Find out which ones have liquidity, which ones have range, which ones have charts that are set up for some good shorts. All right, tech. You know, a bit extended, definitely not relative weakness, but the relative strength isn't anything to gawk at either. I would play versus last week's highs, right? So resistance for me would be right up in here. And for longs, I'd be looking for the 20-day, okay? Energy and oil, still just trending. Remember, we've been talking about this for quite a while now. Like, objectively, the two sectors, energy and oil, are the two sectors where this whole bear market, you could have just been buying dips and the uptrends would have been paying you, right? So, again, I don't want to be getting long when we're that extended from the weekly 20. I think the dips on the weekly chart are where you want to be looking for your entries on the long side. So just because there's nice strong uptrends on these sectors doesn't mean that I'm trying to get long them. It's also about timing, right? So can this hold the daily trend and head higher? Of course it can. Will it do it without me? Yes, it will. The only time I want to be getting long is on the bigger pullbacks to the bigger levels of support, where I'm getting a much clearer entry, and just knowing that the trade's much more asymmetric. Same with oil. Okay, so if you look at the weekly, I mean, it's just been up. I need to see it come back in. Probably test this one, the weekly 20s 138, maybe even the weekly 50, right? Like this 130 area would be where I would start to then get interested in the long side on those sectors. It doesn't mean that I'm also, at the same time, it doesn't mean I'm short biased either, because we're not extended on the daily chart, right? None of this to me is anything I care about. If we get really extended away from the daily 20, I'll start looking for fades. If we pull back to the higher time frame trends, that's when I start looking for the longs. Okay, so that is it for the sector analysis. We're gonna jump right into the setups. If I can find, hold on one second. I have lost my notepad that has. One second, guys. I have a notepad list of all the names I'm going to cover, and I have no idea where the heck it went. I'm going to have to go into the Slack channel and find it. This is embarrassing. I don't know why I didn't have this already opened up. All right, we'll just do it right off this. Okay, strong stocks, looking for continuation. This is long setups, guys, okay? The first name I'm looking at is one from the other week, right? EDU. I think it's getting ready. It never triggered the other week. I don't know if it was 2 weeks ago we did it, where you can see the alerts never triggered. So I have two alerts, okay? I've got one over 29.89. So over 29.89, if I could talk. That's where I want to look to join trend on dips. The next alert up just says that it's into the gap, right? And if I do want to know if we break above those highs and get out into the gap, which it's a big gap to fill. Do I think the gap's going to fill? No, I don't. At least, especially not on a day trade. If you want to stick around to see that gap fill, it's almost guaranteed that it would have to be a swing idea. I'm not swinging Chinese trash, but I will day trade it for sure on the momentum side if we get above that 29.89 area. So that's the idea on EDU. The next one is AMD. It says, very interested in joining the long side if it continues to hold over Friday's lows. Even if it breaks them, I'll be stalking for a reclaim of that 72.50 area, which is this line you can see we have drawn here. So basically, what is it about this chart that typically this is not what you'll see me put on the prep, okay? Let me explain to you the thought here. This was a major level of resistance I had been watching, 72.50-ish, okay? It comes from way back here. I mean, it's just a really super black and white objective level that I thought when we had a big move up into the underside of it was going to be a really good level to fade. But we pushed right through it. You can see we stuffed it on November 11th, but then the next day it gapped up and pulled back. So here's what you have. You get this gap up, pull back. Big red day, right? It gave like almost the whole move back. But then the very next day, gap up again, and then push, and then gave a lot of the move back. And then finally it started coming in, right? I think it blew a lot of shorts out, and people probably thought this is, a big fade. Short, it comes in. I think people are just, overstaying, and then you get this big rally on Thursday, and it's right back above that level. And then Friday was the price action that really kind of has me interested in it, is the fact that now it tried to roll over again, but it held that level and soaked it back up, right? So all I'm looking at is pretty much I want to play it over under on Friday's low a day. If we continue to hold over the 72.50 area, probably look to join trend, probably look for an opening long setup. All that to me would be is a red opening 5-minute candle, and then the second 5-minute candle be a big green candle and buy the break of the high of the opening 5-minute candle. If you don't understand that setup, do not copy it. You guys need to learn these setups and then study them. Do not just, oh, Ricky said it on a Sunday prep. Test them, track them. get the confidence and conviction in them so that you can trade them. But that's what I would be looking for to possibly get long on AMD. I just want to see if it holds that Friday's low a day. Now listen, the one thing I will tell you is if it loses Friday's low a day, this right here could put in a higher low, okay, on the daily chart. So a quick flush down and then a reclaim, that's where I would also look to get long, because I think a lot of people would look at this level break here as a short. So I would look to see, is it become like this quick little failed breakdown, reclaim, and then curl? Because if so, I'd definitely be looking to get long on that, because that's the type of setup that what it's going to end up doing is it would put in a higher low on this daily chart right here, and then we could possibly get moving again. Now, if we don't do that and don't reclaim, then there's no trade at all. We lose Friday's low a day, doesn't reclaim, just stays heavy, lower highs and trends down, no trade at all, and that's fine too, okay? Possibly even could fade it. You know, we lose Friday's low a day, starts butting its head every time it tries to reclaim and putting in lower highs. It might be a trend trade to the south side there, because we do still have quite a bit of room back to the daily 20. But I am watching this one. Now, I also put NVIDIA on here, and I just put, whereas the AMD idea was for a trend join, NVIDIA is different, because NVIDIA, I think there's just a clear level to buy an opening flush. So if this sector, which is the chip stocks, right? SOXX is, if you guys don't know, the ETF for this, right? So if this is just going to have a really heavy day and we get this opening panic flush tomorrow morning, the quarterly pivot / 20 day is a huge level for me to buy this on the flush. Remember the question that was asked, we talked about it in the opening introduction to this Sunday prep, was like those parabolic moves, whether they're to the downside or the upside, do I step in front of them? This is the type where if this flushes emotionally right down into 144, I will buy it with set risk. I have hotkeys set up that will put me in the trade with set risk, and I'll jump right in front of it. And if I'm wrong, I'll take my loss. Full size, one entry, and you know, risking on a $140 stock, probably give it about a point of room from my entry. So if you time those entries, when you wait for them to get extremely extended, and the move is, you know, at some point stocks cannot just fall straight down. They're gonna run out of sellers, and you'd be crazy to be shorting it into that much weakness. The buyers eventually step in, you get these big bounces, right? If you time those, there's some, you know, you could risk a point to make 2, 3, 4 points real quick on a day trade, and I'm talking in the first 30 minutes of the morning, and you could be done for the day, right? You don't need to be sitting at your computer all day if you catch something like this right off the open. So that's the NVIDIA idea, 144.20 to 144.50 on an opening flush tomorrow morning, okay? The next idea is Zillow. Hard emotional flush into the 20-day / monthly pivot, exactly the same as NVIDIA idea, okay? 20-day monthly pivot. What did we just have happen on Friday? Short trigger, okay? Here's your short setup. The break of Thursday's lows was the short trigger. This should come back and test the 20-day. That's the defined target for this setup. So I want to see it seek out that balance on that time frame. I want it to do it emotionally fast, panic flush, like those type of moves. That's the edge, right? If this just grinds down to the 20-day, I don't care about it. And hopefully you guys have understood that throughout all these Sunday preps over the last year and a half, 2 years, or whatever, however long we've been doing these, is that I get alerts throughout the week that, oh, something got to my level from the Sunday prep. It doesn't matter. It's how it gets there. I don't give a flying F about Zillow if it just meanders down to 33, okay? I need that panic flush. It's got a $2 ATR, it closed at 35.20. So if it flushes 2 points, it's getting to its ATR, it's coming into levels where I know there should be buyers, I'm gonna take my shot. Just grind down there, no trade at all, okay? All right, so that's it for strong stocks looking for continuation. The next section is oversold reversion setups, and that is only one, and it's Airbnb, and it's not necessarily oversold, right? This is not your typical chart you're going to see in the Sunday prep for me for this setup. But I think a panic flush down into this 91.40 area, which monthly pivot, those recent lows, you kind of have this little uptrend line. It could hold anywhere in that level. Close at 97.77, $5.67 ATR. You can always see over here in the corner of my screen. That's going to put us right into that area. So any kind of panic flush off the open tomorrow morning, I'd be looking to scoop Airbnb down there. All right. So that's it for the long setups. The next section is weak stocks looking for continuation. Meta 118.50, which is the quarterly pivot area, versus last week's highs, previous week's highs. So any kind of pop right off the open up into those levels, I'm looking to fade Meta. Now listen, I get it. You know, people will be like, well, look at this. How is this a weak stock? It's push, push, push. Well, look, zoom out. It is a weak stock. We're pushing. Where are we pushing? We're pushing right up into recent resistance levels. Okay, so I'm two ways of looking at it. Last week's highs are going to be the highs I'm playing against, or if we lose Thursday's lows, I might look to join trend. Okay, so a crack of Thursday's lows creates a lower high. Confirms a lower high. Right? We've possibly got a lower high already, right here. So we won't know that's a lower high until we lose Thursday's lows. If we lose Thursday's lows, then we have the push up into the underside of the 20-day, the pullback, the lower high, and then that's how stocks continue trend. That's how they hold trend. You can look at it upside down, and it just looks like a beautiful pullback long setup, okay? So just remember that. Get rid of those. All right. Next stock, Roblox. 33.83. You know what sucks is I'm reading this off the Slack channel, so I'm trying to make sure I'm not missing anything off this. It says 33.83 will be the weekly pivot. Okay, so I did the math using a pivot calculator. 33.83 will be the weekly pivot starting Monday, and it lines up perfectly with this key level we've already had marked on the daily chart, which is this. I can draw this if I can get it to. Stupid. Sorry, guys. This right here. So we've had this level marked for a very long time. It's also going to be the weekly pivot come tomorrow morning for this coming week. It also lines up really nice with a retest of the underside of this trend line that we broke, right? So any kind of push up into that level, if it's parabolic, right? If it's a big emotional pop, I want to look to fade that. If that level does not work, I am ready to jump in right at 35 as the next kind of area, okay? So it can stop me out. I'm fine with it. Let it stop me out. I'll take the stop and I'll re-enter 35. Maybe I'm wrong there. Like I really like the 36 area too, but I think a pop right off the open into this 33.80 to 34 area is where I'm going to be first shot test on Roblox. Next idea in this section is Rivian. Hard fast spike into 32.80 gets me involved. You can see that's the underside of the 20-day. It's the annual pivot and the quarterly pivot, and it's also Friday's high day, right? And it's also, I mean, if you just draw a line straight across, it's funny because it's going to line up with the pivots that we have showing there, but it's just clear as day, right? I mean, support, come from the underside, resistance, any kind of big pop up into that level, and I'm looking to fade this thing, okay? So 32.80-ish, we'll call it that. If that level doesn't work, you also have another one on this one, right up into the underside of the 50-day. 33.66 is the monthly pivot, and I'd probably be a little bit higher up into this 32.90 area, which is the low of the candle from November 15th. I don't know if that's Tuesday. Was that Tuesday? I think it's Tuesday's lows, okay? All right. Overbought reversion setups. Two of them. FSLR. I know you guys are probably tired of hearing me talk about FSLR. It's not there yet, okay? I'm looking for a blow off into 175, 176 to possibly get short on FSLR for a day trade. Make sure you guys understand that. These are day trade ideas. I know I get asked about FSLR a lot because we looked at it for the fade on what was setting up on the weekly chart, and it gave a nice fade, came almost down to the weekly 20, found support, and it's going again, right? I'm not swinging this thing short, but when it gets extended to the upside, like look at this level we're playing here. Let me get rid of this because there. All right. You can see this historical level approaching 176, 175, 176. 175 I like because it's that psychological round level, like it's a quarter. And 176 is the actual level from back in 2011. So yeah, I'm definitely watching this for a blow off move up into those levels. Okay, higher to better. If it doesn't want to stop there, maybe it wants to poke its head above 176. That's fine too. Okay, but with these overbought reversion setups, for me, it's always the higher to better. If it's parabolic off the open, you know, we wake up tomorrow morning, maybe we gap up 170, 168, 170, and it just has this 4, 5, 6 point ripper right off the open. I'll step right in front of it with a hotkey, full size, and give it some room, right? It's almost a $200 stock, so expecting to give it about 1.5 points, maybe even like $1.75 of leeway for it to move against me before it would ever hit my stop. But I'm fine with that because, you know, I'm not looking to take any less than 4 or 5 points on the fade if it does that. All right, that's FSLR, and the next idea from this section is IBM. IBM 150 psych level, kind of blow off into that level. I would like to look to fade that. You know, this thing has just been kind of grinding. I want to see it kind of get a little excited. I'm hoping we don't get a gap down or anything. I want to see it push without a reset because Thursday did gap down a bit, and so it did already kind of do a recent reset. I'd like to see it just push. I do want to point out, like, this thing I've been stalking for a really long time, for a swing long in a longer term account. Like I have a SEP account I manage. I have some kids' college accounts as well, but this thing is really starting to look like it's getting ready. This alert up here is for to know, you know, like, all right, above this level up here, and then I do really want to start thinking about dabbling long for longer term things with set risk, right? It doesn't mean I'm getting long and it's YOLO, right? Just because it's in a longer term account. Like, don't look at it, set it and forget it. No, not at all. I still have risk levels and stuff, but this has been in an objectively black and white downtrend for a very long time. You know, it put the highs in back in 2013. It's just been down lower. We finally started to find a base, higher lows, starting to push. So I do kind of have this on watch for a long, but when we get extended like this to the upside, there's no way the long is getting put on until we pull back to major levels of support. 2, I'm drooling over the possibility of that short setup in my day trader shorter term accounts. All right. So 150 is the first level I'm watching for IBM. All right. The last 2 names, like I said, are swing ideas. And remember what we talked about is in a bear market, the only thing I would touch for a possible long swing is something that is already performing well even in the bear market, as if it doesn't acknowledge the bear market, right? So the first one is BMY, Bristol Myers, and it's basically, one, I like the sector, right? We talked about healthcare. Dude, did we look at the XBI? I feel like I skipped XBI. I feel like I went from communications over to technology, but XBI I still feel is behaving well as well. Behaving well as well. And so you could make an argument that BMY kind of fits into either one of those sectors. Both sectors are behaving well. What I like about it is the pullback to the 20-day. And what's funny is this got kind of put on my radar. I think last week somebody asked me about shorting this. And I was like, dude, it already had the move back into support, right? So I feel like we missed the short. What it's done since is something I always like to see. And that is you put in this low. Whoops. Higher low here. And we've kind of triggered, right? So it was a break above this level here that kind of sent it. So the pullback, the push up, the higher low, and then the break. So now, right now, the game plan is the trade's asymmetric. It's in a sector I like. We're trading pretty much at all-time highs. So it's definitely not paying much attention to the fact we're in a bear market. And I'm basically just looking to get long anywhere down into this 76, 75 area with risk under 75 basically, right? Obviously the real stop would be under this 74.50 area, but I think you would rather see it just not come under 75. So you buy 76 with risk under 75, you've got about a point of risk, and the first target is all-time highs, right? So you're looking for a push into 81 from 76. So it's very asymmetric, right? I mean, just telling you right here, even if you use 74, what is the lows here? 74, 72 is your stop, which is, you know, giving you a little buffer below 75. You're getting almost 4 to 1, okay? So one of the things I want you guys to understand is that on these swing trades, when the risk reward is this skewed, I don't care if I'm wrong, right? Like, I'll put this trade on. I won't even hesitate. This thing pulls back to 76. Buy it with set risk. Depends on how much you want to risk on a trade, right? You want to risk $1,000? Take 1,000 shares, set your stop. I mean, you're gonna make, you know, if you're risking 1,000, you're getting 4 to 1. You're gonna make 4 or 5 grand when you're right. Who cares if you're wrong? Because you just keep on playing. Let the law of large numbers play out in your favor by keeping that risk reward skewed. Okay, so that's the BMY idea. And again, asymmetric, agnostic of the bear market, and in a sector I think is performing pretty well. The next one and the last one is McDonald's, guys. Mickey D's, baby. Same setup, right? Look, broke out to new all-time highs. Finally get the pullback to the 20-day, okay? So this one has not put the higher low in yet, okay? So you got your low here when we pulled back into the 20-day. I'm looking for a higher low. So I want to kind of buy a pullback, the next pullback into the 20-day with risk under the recent pullback, okay? So again, you'd be looking at an entry of 270, risk under 266, and a target of 281. So you're risking 4 points to make 11, okay? It's not quite as asymmetric as the Bristol Myers idea. If you're patient, maybe you get better prices than 270, right? Maybe you can get down here into this 269, 268 area, and then you start to see it get more and more skewed in your favor. Now, understand, if something is truly strong and your thesis is correct, you probably don't want it to pull back too far, right? You want to see that pullback come to a level that makes sense, that's logical and rational. You don't want to see it kind of coming down here and flirting with 267, you know, when that's well below the 20-day, well below the recent break to all-time highs. You know, I want to see that 20-day hold. So yes, you get better risk reward down here in the 268s, but is it behaving correctly? That's another thing to ask yourself, okay? So yeah, McDonald's kind of recession proof, trades asymmetric, set it and forget it, and just be at peace with the outcome. That's another thing you guys have to learn how to do, is just be at peace with being wrong when you put the trade on, okay? That's it for the prep. I'm going to see if there's any questions. My throat is bugging me a bit from talking so much. Real quick, before I get into the questions, guys, make sure you understand there's a Black Friday deal for TrueTrader. If you've been on the fence, basically you're going to save on the annual plan. It's basically $300 off. It's just a flat rate of $9.95 for the whole year. And basically you're waiving the sign up, the $295 sign up fee. Let's see. And then we're also going to do, it looks like a giveaway, like an entry for a giveaway where the first place is a annual membership. Second place is like a $500 TrueTrader gift card that can be applied to whatever account you would like to set up. And then third prize looks like it's a $300 gift card. So that's a pretty cool thing coming up. Stay paying attention for details. I'll make sure we get them out there. And let me see if I gotta find where I hid the chat. Let's see here. All right, I actually don't see any questions, and that's kind of a good thing, because My throat is killing me. Even though I'm finally not sick anymore, I still have this cough that's lingering. And this is actually the first time since I've been sick that I've talked for this long. So I feel like it's just irritating it. Jordan says, high beta names have been choppy this month for me. That I started selling, have been so choppy this month for me that I started selling spreads on SPX. Cool. If that's working for you, great. But make sure you understand that a lot of people will call something chop because they don't understand how stocks move, right? So like, I mean, let's just look at something like Nvidia or whatever, right? Like, there's still trends, right? Daily chart, uptrend, right? Weekly chart, still downtrend. Won't be like the last major highs before, or major lower highs, was up here in this 193 area, right? So anything below here is still possibly working on the next lower high. So you have to I want to make sure you guys understand, you have to understand the mechanics of how stocks move, and understanding where your high probability areas are for whatever time frame you're trading. Because if you don't understand those things, then you are going to 100% feel like it's just chop. But there's always a trend out there that's going to pay. You just need to understand, to learn to look for that low hanging fruit. Because I think a lot of people do that is they want to trade whatever. Like, some people only trade a certain equity. Some people only trade Tesla. Some people only trade Apple. If that's you, then you have to be much more patient for when things move into those high probability areas. But if you trade whatever equities are out there at your disposal, and you're just looking for the things that have the best opportunities, then there should always be something in play that day. Something's going to have range, something's going to have liquidity, something is going to be the quote unquote low hanging fruit. You guys got to understand how to look for that stuff. All right, guys. I'm going to call it there. Enjoy the rest of your weekend. Join us over at TrueTrader if you haven't already. Come talk to any of the mods over there. We'll get you squared away. Remember, you can use the code YouTube in all caps to get 20% off from the YouTube stuff. And if not, I'll see you guys tomorrow morning in the market. Hope it's not your money I'm taking. All right, peace.